Alright, hey guys, happy Sunday. I hope y'all are doing well. Let's jump into the watch list video here. And this will be the watch list for the week of October 18th. So I am taking a bit of a break here from the birthday celebrations. Today's my 29th birthday, but even on a birthday, we gotta do a bit of prepping here. So, with my mastery, we're trying to get in a rhythm here with the market this month so far in October. And an uptrend is easy to get into rhythm with. A downtrend is easy to get into rhythm with. These total freaking chop fests, which up to this point, it's pretty much what this market's been so far this month. These are difficult to get in rhythm with. So far in October, we've taken profits on a Tesla put credit spread. We have taken quick profits on 2 iron condors, one on the SPX, one on the SPY. So those 3 trades there, those have been... we've grown our account by 1.5% with those 3 trades. Now with our open positions, we got a call credit spread here on the IWM with short strikes up there at 228, and that does expire in a few weeks. And then we have kind of the lotto trade here with a 4,300 strike call credit spread on the SPX that expires first week of November. So in the event IWM and the SPX work in our favor, then we'll have grown our account by 10 to 12% so far this month. But in terms of those 2 trades potentially working out here, with the IWM, so our call strikes are up here, our short strikes rather, on those call credit spreads are up there at 228. So certainly, for some, probably not the most comfortable to, sit through that gap there on Friday. But the IWM is just incredibly range bound. You get these big pushes into about 2 ATR. You get these big flushes into about minus 2 ATR and a bunch of back and forth here. So you did get your big gap up there on Friday. You did run. Then you could pick multiple walls of resistance here, but you basically got more of the same, which is really just an index here that's totally range bound. So I do think next few days you could get a dip back down to the 21 EMA, and then taking into consideration expiration is not this Friday, but next Friday. I do think we'll be in a good position to take, 70+% of max profit home on that call spread, or this thing makes a legitimate breakout. I don't think personally, and obviously what I think doesn't so much matter, I don't think over the next 2 weeks you're going to get a huge breakout here, but anything could happen. But in the event you do get to pull back to the 21 EMA, depending where we gap up tomorrow, could even make for a good, short. Buy some puts for a quick flush here. We should be in good shape. So if we can hit our profit target on that spread, then that along with Tesla and those 2 iron condors, at that point we'll be sitting at about 2.5% account growth. And keep in mind, we're taking small positions, 3% risk. So we'll see how IWM goes here, but then where the real home run for us could be is that SPX call credit spread. And we're structuring this in a fashion here where, hey, if the market does end up rolling over here October, November, we're in a really good position to take home a big profit. Or if the market does otherwise, we'll manage it accordingly, and it could turn into a bit of a paper cut ultimately. So you do need the market to fall through 4,300 here, for that trade to really work out in your favor. Now, in terms of, is that possible at this point? Certainly did look like it potentially, a few times over the last few weeks here. However, we got to talk about that price action into Thursday and Friday. So, just real quick, that's what we got for open positions. That's what we've closed here this month. And obviously, we're looking for our next few trades. So, in the event the market does end up breaking through those lows, that alone will leave us with a really big month here. We're looking for a few more trades, though. So if that trade does work out, we're in pretty good shape to have a really solid month. But we're not going to be satisfied with that. We're looking for a few more trades here. But in terms of just the market as a general statement, and what's the likelihood that we actually do roll over again and break those lows after, let's be honest here, pretty ridiculous, pretty solid bounce. Now, and again, I always got to stress this, my opinion or what I think, it's worth just about 2 cents. But my 2 cents is, this is a short covering rally. You got monthly expiration last week. I think the shorts just getting banked over and spanked at the paddle here. If you look at the volume was crazy low there, so just kind of has the characteristics of a short covering rally. Now the question is, where do we go from here? So there's certainly the potential, I would say, that you got oversold here. So you're oversold. Now, sprinkle into the equation, you got monthly expiration. Sprinkle into the equation that typically into monthly expiration, the market loves to punish shorts here. You might have all that coming together for a bounce back into resistance. Basically where we're touching here this evening. So this could just be your oversold short covering, bounce into resistance before you start to make your next leg to the downside. Now, for the purposes of our short there, that would obviously be picture perfect. Or potentially, on your next dip here, you come back down towards the 8, you come back down towards the 21, and the market holds up pretty well. But, my colleague, Sam from the options room, Sam Shames, in his Friday video, he used the term over-under, and I kind of like that term here. So the way I'm looking at it is, under resistance, anything is possible. So that does include the rejection here for a move right back towards the downside. I would also say above resistance here, the market very quickly has come in here and tried to fix this chart. Not just from a structure standpoint, but also from a momentum standpoint. So I think typically in these videos, especially this year, just with the way the market's been, I'm coming to you with a really clear game plan, kind of like, hey, here's exactly what I'm gonna do. Here's the setups I want to trade. Here's the entries I'm gonna take. Here's the whole game plan laid out. This is a little bit more of a sit and wait kind of market. So again, could we get rejected here? We certainly could, and I think if we do, at that point you're coming back down towards the 21, and then I think you make more decisions from there. If we crack through this level, the idea of getting down towards those lows, I think becomes more of a difficult proposition, so to say. So that is your key level of resistance here. Now, in terms of your key level of support, I'm actually going to give you the weekly 21 here. The reason I'm going to give you the weekly 21 is this is what's made shorting this market so difficult. Big time moving average here in your weekly uptrend continues to hold in a big fashion. So you get your rejection at the 21. You get your short signal. You get your entry here for a short on the daily chart, and you come down to weekly support, and this sucker just continues to hold here. So there's resistance. There's support. Weekly 21. So there's a few key levels, and if we just go across the board here and kind of look at the quality of the market from a kind of a sector to sector standpoint, this technology, which you get a big move here last week. Structure and momentum is still a little bit iffy here. So, is it an impressive bounce on Thursday and Friday? It definitely is. Suddenly, does technology have, the most bullish looking chart in the market? Incredibly far from it. The semiconductors here. So you're back above your 21. You're doing so with red 10x bars and no stacked EMAs. So great looking Thursday, Friday. Not the most bullish thing here. The industrials. It's kind of the same, so you give it kudos for putting together a good solid move there towards the end of the week, but is that the structure when I want to get long? Not necessarily. So, there's a lot of sectors that bounced last week back above the 21, but you don't really have that beautiful, bullish structure ideally we're looking to get long in. Where you do have that is something like an energy. Now, crazy strong here, crazy bullish. There's nothing I can do with it until we get our next dip. It's a dip I would like to buy. Again, there's momentum here. So pretty much I'm looking for green lights, green 10x bars, I'm looking for positive histograms. You give me those few things, I'm looking to buy a dip. But that's the key, I'm looking to buy a dip. I'm not looking to chase it up here at plus 3 ATR. So if you've had the pleasure of being long energy for the last few weeks, that's awesome. I am looking for a dip though, so I'd wait for that. And your financials look good here. Daily squeeze fires to the upside, so I'd like a bit of a dip there as well. And then you have consumer discretionary. So these are quality charts here. There's structure, there's momentum, there's trend. These few groups here, energy, financials, and consumer discretionary, they're making a good argument for the market stabilizing and grinding higher. So, I do think right now, and again, this just kind of goes back to, hey, it's a sit and wait type of market for me. Do I think we could get rejected and roll over again? Definitely. Do I think we could stabilize and slowly but surely start to work back towards those previous highs? Wouldn't surprise me either. So, I think until we have a bit more to work with, you got to be open-minded here. So, if you're looking to make a bullish argument, there's plenty of things to support your argument. But then as you look at volatility, as you look at the dollar, you look at a handful of things outside of the equities market, there's also a lot of things that can help support your argument that the market might be heading to the downside. So, again, you're not quite getting conviction out of me here tonight, but I do think you want to be flexible as a trader. So, one of the worst things you can do, and we've all probably done this at one point or another, but one of the worst things you can do is marry your ideas. So if 2 weeks ago, you convinced yourself this market is bearish, we're going to roll over, and I'm going to short it, now if you marry that idea, you might be part of the group that's just getting spanked as that short cover rally unfolds. So, I think Monday through Friday you try to keep the spanking to a minimum. I think you save that for the weekends, but we'll be doing prep tomorrow morning. We'll be together again Wednesday morning for prep. We got to let a few things, I think, unfold here before we really have something concrete to work with. What I can suggest, though, is you wait for a bit of a dip. Wait for a dip, then the market basically has the opportunity to prove itself. Do we dip and then just continue to sell off and break through those lows? Do we dip and then start to see, continuous accumulation? I do think after a little bit of a reset here, at least for me and my style of trading, bit of a better opportunity to try to get a gauge of things here. So, join the pre-market prep tomorrow morning. We'll look at a few individual setups. And as I mentioned, if the market does stabilize here, I'm not going to marry any ideas. So if I got to start to get long, I'll start to get long. I would look for team on a pullback. I think Match.com, that's a really solid daily squeeze. There's things setting up out there like McDonald's. McDonald's doesn't look all that bad. I would take Home Depot. I would take Lowe's on a pullback. All of a sudden, you've got Nvidia. Beautiful daily squeeze. There's AMD. I'd take AMD on a dip here. I would love to see Tesla dip. So if I got to start to get long, and, I would do that if the market says, hey, path of least resistance, probably not to the downside. So with patience here as a few more things come together, if in fact it's not looking like we are going to roll over and break those lows, I'm not marrying ideas. Immediately, right, once I have enough to work with to get a firm sense of, all right, we're probably not going to break these lows here, it's time to get busy back to the upside. So the Teslas, the Netflixes, the Teams, the UPSTs, the Affirms, AFRMs, there's a long list of things that have been bullish over the last few weeks in the midst of an ugly market. Just imagine how well they're going to perform if the market actually starts to trend back towards the upside. So you're looking for dips there. But I say all this to say, first thing you got to do here is be patient. Not always the easiest thing, but the first thing you got to do here is be patient. But remember, the days go by quickly, but it is a long month here. And like I mentioned earlier with the mastery, we're taking baby position sizes here. We're taking 3% position sizes on credit spreads. It doesn't really get more modest than that here. And if everything works in our favor, it's going to be a really solid month. And even if everything doesn't work in our favor, you got plenty of time here to take advantage of that next best trade. So just one good trade after one good trade. Even in a choppy market like this, you can still make some headway. The key, though, mi amigos, mi amigas, is patience. The key is patience. So, I love coming to you with a solid game plan, giving you the formula and telling y'all to hit the road. Today's game plan is we're going to be patient here early in this week because, quite frankly, in October, anything could happen. Anything could happen in the beautiful month of October. So I hope you've enjoyed your weekend. Hope you've enjoyed a little bit of time with family, some time outside. Took your dogs for a walk. Hopefully you enjoyed some football here. We got NBA basketball starting this week as well. So, my goodness, what a week it's going to be. But I appreciate you being a subscriber. If you're not already, what are you doing? Hit that like button. Hit that subscribe button. I appreciate y'all. I'll see you tomorrow morning for prep. Until then, enjoy the rest of your Sunday, and we'll talk soon.